When a giant like Nike starts to stumble, everybody pays attention. The iconic swoosh has been hitting some serious turbulence lately, with its stock price dropping to levels we haven't seen in over a decade. But right when things looked pretty grim, a very powerful signal emerged from inside the company.
I mean, think about that. For a brand that's basically dominated the world for decades, hitting a 12-year stock low is a really big deal. You had analyst downgrades, worries about slowing sales, a whole storm of negativity was swirling around. And the big question on everyone's mind was, okay, how much lower can this thing actually go?
And then this happened. Over $2 million. That's how much personal cash the insiders, the very people who know Nike from the inside out, decided to plow back into their own company's stock. And let me tell you, this was not just some routine purchase. This was a massive vote of confidence. Right at that moment of, peak pessimism, Nike's own leadership team stepped up to the plate. They didn't just send out a hopeful press release. Nope. They opened their own wallets and started buying shares right on the open market. So, what on earth did they see that the rest of us were missing? Okay, so let's break this down because this $1 million signal is really what lit the fire under the recent stock rally. We're going to follow the money and see exactly who was making these huge bets on a Nike comeback. And we are not talking about small change here. You've got Tim Cook, and yes, that's the CEO of Apple, who also happens to sit on Nike's board, snapping up over $1 million worth of stock. Just a few days later, Nike's own president and CEO, Elliott, does almost the same thing. And then another director, John Rogers Jr., jumps in and adds thousands of shares. These are huge, deliberate moves from the absolute top. And this is exactly how the market interprets these kinds of buys. See, when executives put their own money on the line, it's pretty much the loudest signal of confidence you can get. It's them basically saying, hey, we think our company's future is way brighter than the current stock price suggests, and that turnaround we've been talking about, yeah, it's actually happening. But, this insider confidence didn't just appear out of thin air. To really get the full picture, we've got to look at the incredible pressure this absolute titan of an industry has been facing. And here's the number. $42.09. That was the 12-year low the stock smacked into right before these insiders started buying and kicked off this rebound. This price point, it really represents the peak of fear in the market, and it perfectly sets the stage for this battle between the bears and the bulls. And this slide just lays out that fight perfectly. Over on the left, you've got the bears, the doubters, and they have some very real points. Analyst downgrades, slowing sales in key markets like China. But on the right, the bulls have a super powerful counterargument. It's fueled by that insider confidence, the fact that Nike is still the #1 brand for teens, and a really strong case that the stock might be seriously undervalued. So, with this crazy tug of war going on, how could an investor even begin to approach this? Well, the analysis we're looking at points to a very specific strategy that actually uses all this uncertainty and high volatility to its advantage. It's called a cash-secured put. All right, let's get right down to it. How can you potentially act on this insider signal while still being mindful of all those headwinds we just talked about? The analysis we're digging into here recommends a very specific kind of options trade. Now, before we get into the nitty-gritty, let's just quickly talk about what a cash-secured put even is. Think of it this way. You're basically selling someone else the right to sell you a stock at a price you choose. And for taking on that obligation, you get paid cash, a premium, right away. It's a neat way to either generate some income or potentially buy a stock you already like at a discount. So here are the exact details of the proposed trade. We're looking at selling a put option on Nike, that's ticker NKE, with a strike price of $42.50, and it expires on May 15th, 2026. The cool part is, for agreeing to this, an investor could collect an estimated premium of 90 cents per share right up front. That works out to $90 per contract. Okay, so we've got the strategy and we've got the specific details of the trade. Now, let's actually walk through what this all means in the real world for an investor, and then wrap up with the key takeaways from this whole situation. All right, here's how this would play out for you. First, you sell that put option, and boom, you immediately collect that $90 premium. Now, from there, one of two things is going to happen. If Nike's stock is trading anywhere above $42.50 when the option expires, you just keep the $90 as pure profit. Simple as that. But if the stock drops below $42.50, you just do what you promised and buy 100 shares at that price, which, remember, is a price you were already okay with. Plus, your real cost is even lower because you got to pocket that premium. So let's just put this all together. The big takeaway here is that you have this incredibly strong insider buying signal crashing right into some very real market challenges. That conflict creates volatility, which makes option premiums, like the one we talked about, pretty attractive. And a strategy like the cash secured put is practically designed for a situation like this. It lets you get paid for all the uncertainty while setting a specific and potentially discounted entry price on a stock that its own top leaders are betting big on.
And that, of course, brings us to the ultimate million-dollar question. The insiders, they've placed their bets. The market has responded with what some people are just calling a relief bounce. So the big question for anyone watching Nike right now is this: was that 12-year low the actual, true bottom, or is this just a temporary hop in a much longer story?